What's going on, everyone? I know it's been a minute since I've posted, but I'm going to try and get more consistent. I hope, at least. But I'm going to start a 10-week series, give or take. Could be a little longer, maybe a little shorter. I'm not entirely sure yet. But just each week I'm going to try and upload a new video going over. We'll start with like what is the stock market, trading introduction, then hopefully build up each week until we get to my final trading strategy and show you some live trades and what I do every day to have success in the market. So with this week being the first week, what we'll be covering is the stock market explained for those who are brand new and don't know. Everyone probably knows what the stock market is, but not exactly how it works and all that it entails. So we'll go over that, the different ways to trade, and then the different types of trading that there are that you're able to do. So getting started, what is the stock market? The stock market is a place where shares of publicly held companies are bought and sold. So when a company decides that they want to go public, they will have what is known as an IPO, an initial public offering, and that is the first time anybody is able to buy their shares publicly. There's ways investors can invest into companies before they go onto the stock market, but for the common people or everyone else, the only way you can invest in these companies is when they have their IPO on the stock market and you're able to buy and sell them. The stock market opens at 9:30 a.m. and closes at 4 p.m. New York time zone every day, and you can buy and sell the shares of companies on what is known as a brokerage. That's where you're able to place your trades, where you're able to invest your money into these companies, and we'll go into different brokerages and where you're able to do this shortly. So there's a big difference between trading and investing. Investing is long-term and trading is short-term. So investing would be buying and holding company shares in hopes that the company performs well and the price moves up over the course of many years. For example, if I think Apple shares or the company as a whole is going to grow over the next couple of years, I would buy Apple and then hopefully see a return in a few years after it performs well and the price moves up. Trading, it's looking for smaller moves within the same day or over a couple days to make a profit. So you're looking for quicker moves, but you're able to see quicker returns of your money through trading. It's just a little bit more risky. So there's many different things that you can invest in on the stock market. You can invest in companies like APL, which is Apple, MSFT, which is Microsoft, AMZN, which is Amazon. The abbreviated letters are known as ticker symbols on the stock market. When you're looking up different companies, you wouldn't type in like the full company name. They have abbreviations to make it only like 3 or 4 letters, or some are only like 1 or 2. It all depends, but it's just easier to search up the companies and find them a little bit quicker. There's also ETFs, which are exchange traded funds. ETFs are a collection of stocks in one investment. The most popular ETFs are SPY, QQQ, DIA, and IWM. We're going to go over what ETFs are. So they're typically seen as one of the safest investments. SPY is the S&P 500, or a collection of the top 500 publicly traded companies. QQQ is the NASDAQ 100, or the top 100 publicly traded technology companies. DIA is the Dow Jones, and it represents the 30 stocks of the Dow Jones Industrial Average. And IWM is the Russell 2000, and it's a collection of 2,000 small cap stocks. So basically what ETFs are, instead of putting all your money into like one stock, say you had $500, instead of putting it all into Apple, you could put $500 into SPY, the S&P 500, and your money would be evenly distributed into the top 500 companies that are publicly traded. So it's seen as a safer investment because your investment is weighted. So like if one day Apple does bad, you could still make money on the day because other companies could be performing well. You won't see as high returns or as high losses, but over the long term, right here, SPY has netted an average return of 10.54% a year in the last 30 years. So on average, it'll move up 10% each year. You know, there's down years, and there's some years where it performs well, but averaged out, you'd average 10% returns a year, which is much higher than your average savings account or any bank accounts. Getting into exactly what is trading. So it's buying and selling to make a profit. There's a common misconception out there that you can only make money when it goes up, when stock prices move up, but you can actually make money when it goes down. When you're able to make money when it's going down, it's known as shorting a stock. So you can short the stock going down to make a profit, and then when it's going up, it's also known as going long, when you're expecting the stock to move up to get a profit. So there are three main ways you can trade, and then there's a fourth that's pretty newer. Options is probably the most popular way people trade. You have the most variety in what you can trade and the most options. Futures is newer. A lot of people have leaning towards that. I'll explain in a few slides here. Then there's Forex, which is foreign exchange. I'll explain what that is. I haven't ever touched Forex. And then crypto. Crypto is relatively new with the popularity of cryptocurrencies. I haven't touched that either. They tend to be a little bit unpredictable, but people have found patterns and have been able to make some money trading crypto. So for this week, I'm just going to go over a quick little explanation of what options, futures, Forex, and crypto are. In the coming weeks, I'm going to be breaking down options and futures into their own separate videos, explaining them, because they can be a little bit confusing. I'm not going to go over Forex or crypto, because that's not really my specialty. I don't know a whole lot, so I don't want to be talking about stuff I don't really know. But options, I trade options pretty much every day. They're split in two different things called calls and puts. Calls is when you are expecting the price to move up. Puts are when you're expecting price to move down. They can be bought and sold on most brokerages that you can invest stocks in. They're easy to start with little capital. You don't need much money to be able to start trading options. And you can trade just about anything from the ETFs that I talked about to Apple shares and Microsoft and pretty much any company you can think of. Futures, I traded futures for a little bit. I kind of stepped back from them to focus on options for right now at least. But they're a great way to trade as well. I trade them for quite a few months. But they're relatively newer to the market. Options have been around for a while, but they're only able to be traded on special brokerages such as NinjaTrade or Trade-of-8. I used to use Trade-of-8. You need higher capital to start, and you're very limited to what you're able to trade. You can't trade Apple or individual companies. You're only able to trade select ETFs and other commodities such as like oil, gold, silver, that sort of things, but not individual companies like Tesla or Apple. They're simpler than options. I'll explain in future videos. Options can be a little bit complicated, so futures can be a little bit more beginner friendly, although you do need more capital to see returns. But the futures also brought along the popularity of funded accounts. So this is basically getting money from somebody else to trade, since you will not, when you're starting, have enough money to be risking with trading. You can get money from other companies that will lend you money, and hopefully you split the profits if you profit. So I'll cover Forex and crypto real quick, but I'm not going to do separate videos about them because, again, I don't really know much about it. But Forex is foreign exchange, so it's a way to trade currencies. For example, EUR/USD, it's the value of the European euro to the US dollar, and it's traded in pips. That's honestly as much as I know about Forex. I don't plan on touching it. I believe you need a lot of capital for it. I think they make funded accounts for that as well, but not something I'm interested in, and not something I plan to be trading. And then crypto, it's the newest way, I would say, that people have been trading. You do need special brokerages again, or crypto wallets. So there's Coinbase, Crypto.com, some other ones like that. It's basically like looking for coins that have a high upside, can make a big move, and you can see crazy returns within the matter of like a day. But honestly, I don't know how people do it. It's kind of impressive to me, but you could also see a coin hit zero in a day. It's very risky. Now I'll cover the different forms of trading. There's 4 different ways people trade. Scalping, that's my favorite. That's what I do every day. Day trading, I do a little bit of that. Not so much, honestly. Swing trading, I swing trade sometimes as well. And position trading can be it can be in the same category as investing. It's looking on the more long term, over a couple months, even years at that point. Just holding a position for a long time. So going over scalping. Scalping is my favorite way of trading. It's looking for quick moves in the market. Usually in and out of trades within minutes. My trades will last anywhere from the shortest trades will be like 30 seconds to like 3 or 4, I guess 5 minutes at max probably. They're traded on smaller time frame charts, like the 1 minute chart. We'll get over charts, what the 1 minute chart means in the next video, I believe. It can be risky trading on the small time frames, but it can net profits quickly, and you don't have to be staring at the charts all day. You can just take quick trades and be out. Day trading is looking for trades within the same day, but the bigger move on the day. Unlike scalping's looking for like quick little bounces, quick little trades. Day trading's looking for the bigger move for the day. They can last anywhere from a few minutes to a few hours, but usually day trades are closed by the end of the day or before 4 p.m. It's the most common way people trade, and they trade on higher time frames, usually like the 5 minute chart or the 15-minute chart. That's where they'll find their entries. Then we have swing trading. It's looking for bigger plays that can be held overnight. So these are looking for trades that you can hold for a couple days, looking at bigger time frames yet. They'll be more influenced by news events overnight. So hypothetically, if you buy Apple hoping it goes up, and Apple releases some news that they're being sued for some sort of thing, it can, overnight drop and put you out of the trade, put you down a lot of money. So they can be a little bit risky, or sometimes a little bit safer if the company doesn't have any news you have to worry about. But you never know. I take some here and there, but again, not something I specialize in. Then position trading, like I said, it can be tied into investing. It's looking to hold a company for a while in hopes they perform well in upcoming months to years, and they're held for a very long time. Over weeks at least, hoping that they perform well and you see a rise in their stock price. So that's pretty much going to wrap it up for today, or week 1. It's just a little introductory just to get you familiar with some of the terms, some of the different ways you can trade and you can go about the stock market. But I'm just going to give you some of my preferences, or what I use. I'll put links in the bio for Public and Webull. I'll put links with my referral. So if you guys want to sign up, I believe both of them would give you free shares of stock after you make a deposit. And you can get some free shares to start your investing or trading journey. So for investing, I use Public. They're very easy for beginners, very simple interface, super easy to use, not complex at all, and just very beginner friendly. It makes everything so simple. For option trading, I use Webull. It can be a little overwhelming at the start. It can be a little confusing, but in the future, when I go over option trading specifically, I'll go over Webull, how to use it, and so I can get you guys familiarized with what it looks like. It can be traded through a computer or from your phone, either one, which is convenient if you're not able to be at your desk or at home. I have taken trades before where I'm just looking at the charts on just my phone and placing the trades on my phone. It's not ideal, but you can. And then for charting, I use TradingView. So charting is basically when you're looking at the charts, looking at the stock prices, see what the stocks are doing. What I use is TradingView. It has many different features and different ways to view the charts. It can be a little complicated, but again, I'll make a video in a week or two going over TradingView and everything that's in it and how to use it and get you guys familiar with what you're looking at exactly. Alright, that's going to wrap up week 1. If you have any questions, leave them in the comments. I'll be sure to respond. I hope to make my next video in this series next week, but if not, it should be soon. I can't promise anything, but we're going to try my best. I know I've been a little inconsistent with the YouTube, but I plan to be more consistent to make more videos to hopefully help you guys out. But again, if you have any questions, let me know. I did my best to explain everything, but hopefully in the upcoming weeks, anything you're unsure about should be clarified and gone over so you have a better understanding. But for now, take care.